Hello students, welcome to my YouTube channel Rising Sun. Today we will be discussing the topic profit volume ratio, which is also called as PV ratio. PV ratio is the ratio of contribution to sales. It is the ratio of contribution to sales. It can be expressed as contribution upon sales. And if we want to express this ratio in percentage, we multiply it by 100. So PV ratio is the ratio of contribution to sales, and contribution can be found out by subtracting variable cost from sales. So PV ratio indicates the rate of change of profit with change in sales. High PV ratio indicates that with change in sales, the profit will change much more proportionately. But the low PV ratio indicates that with a change in sales, the profit will change but less proportionately. So to calculate PV ratio, we can use this formula. PV ratio is equal to contribution upon sales into 100. PV ratio can also be calculated by another formula, that is change in profit upon change in sales into 100. This formula can be used whenever there is data given for 2 successive years. In that case, we can use this formula, that is change in profit upon change in sales into 100. PV ratio can be expressed in percentage. PV ratio remains constant or same at different level of outputs. PV ratio will not change with change in volume of production or output. So at irrespective of change in production, the PV ratio will remain same. PV ratio changes with change in sales or change in sales or selling price will change PV ratio. If you increase the selling price, PV ratio will increase, and if you decrease the selling price, PV ratio decreases. Because increase in selling price will increase contribution, and decrease in selling price will decrease contribution. So change in contribution will definitely have an impact on PV ratio. In the same way, PV ratio will change with change in variable cost. With change in variable cost. If variable cost is increased, PV ratio will be decreased. PV ratio decreases. And if variable cost is decreased, PV ratio increases. This is because the variable cost is a part of calculating. To calculate contribution, we reduce variable cost from sales. So if we increase the variable cost, the contribution will be decreased, and if we decrease the variable cost, contribution will increase. So increase in contribution will increase the PV ratio, and decrease in contribution will decrease PV ratio. So anything which increases or decreases or changes the contribution will lead to a change in PV ratio. Hence, selling price and variable cost both will have an impact on PV ratio. But if we see or consider the fixed cost will not have any impact on PV ratio. Fixed cost will not have an impact on PV ratio. So a change in fixed cost will not affect the PV ratio. Similarly, change in variable cost and change in selling price will have a impact on PV ratio. PV ratio is very useful to find out break-even point, because the formula for break-even point is fixed cost upon PV ratio. So PV ratio can be used to find out break-even point. PV ratio can also be used to find out the profit at any volume of sales. For example, if we want to find out the profit earned at a sale of 1 lakh, we can find out the profit at a sale of 1 lakh by using PV ratio. Similarly, PV ratio can also be used. It can also be used to calculate the sales required. It can also be used to find out the sales required to achieve a desired profit. Suppose we aim a profit of 50,000. We are desiring a profit of 50,000. So to achieve a profit of 50,000, how much sales is required can be calculated by using formula of PV ratio. In this way, PV ratio is a very important concept in marginal costing. PV ratio is simply the rate of change of profit with change in sales. During the period of high demand, of products, a company with high PV ratio will earn huge profits, because during the time of high demand with increase in sales, if the company's PV ratio is high, with increase in sales, the company will have a high rate of change in profit. But during a time of low demand, of products, the company with low PV ratio will suffer less. It will suffer less because with decrease in sales, the profit will fall, but not at a greater extent. So during time of high demand, the organizations with high PV ratio will enjoy huge profits. But during the time of low demand, the organizations of having low PV ratio will suffer less as compared to the one with high PV ratio. Hope students, the concept of PV ratio as discussed now is clear to you. Hope this video was useful to you. If this video was useful to you, you like this video, please share this video and please comment if you want any other topic to be discussed. Thanks for watching.